What's up, you guys? Steve here, and it is February 2021, which means it's almost tax time. Now, I'm going to be covering in this video some of the things that you might want to consider before you file those 2020 taxes, because there was a lot that unfolded last year and there's a lot to take into consideration. So I'm going to be covering them for you, and as a matter of fact, there's so much to take into consideration. At this moment, I can't even remember everything that we're going to be talking about. So right here, I'm going to put up on the screen all of the things that I'm going to be covering in today's video. Now, just to clarify, disclaimer, I am not a CPA or a tax attorney. I am just a guy that likes to sit in the corner of my room and talk to my phone and then upload it to YouTube. This is by no means supposed to be legal or tax advice. This is just for strictly entertainment purposes. So if you're watching this and you're a tax attorney and you're watching this and saying,
"This guy has no idea what he's talking about,"
my response to you will be, you're right, I'm wrong, you're smart, I'm dumb, you're attractive, I am not. This is by no means supposed to be the answers for everything. This is just supposed to be things that I'm taking into consideration that you might want to take into consideration as well. Now, with that being said, one of the first things you're going to want to do, if you haven't already, is you're going to want to make a charitable contribution to the like button. Now, this is going to be a 100% tax rebate for all the money it costs you to click that like button, and when you do it, it's going to help contribute to a hungry YouTuber. So thank you so much. I appreciate it. Also, leave your comments and share these videos out to anybody that you think might be interested as well. And if you'd like to see more videos like this about money, investing, what's happening with the economy, be sure to smash the subscribe button and turn on the notification bell so that way as soon as I upload videos, you can get notified right away. And follow me on Instagram as well at SteveRam3. All right, guys, so let's go ahead and get started. So before I get to all the good stuff you're wondering about, like the child care tax credit, stimulus checks, unemployment, education, all that good stuff, first, let's cover some of the basics so we can all get on the same page. So here is a look at the 2020 federal income tax bracket. Now here you can see the tax rate percentages, the taxable income bracket, and the taxes owed. So just to make it easy, let's say you made $100,000 worth of income that is taxable. You're going to end up in the 24th percentile, but don't worry, you're not going to owe $24,000. You're actually going to owe $14,605.50 plus 24% of the amount over $85,525. So all the income you get is not taxed at the same percentage rates. So they have brackets and certain amounts are taxed at different rates. So this is the one for a single filer. If you're an individual person that's filing your taxes on your own, these are the brackets right here that you're going to be following. Now, here's the one if you're a married couple filing jointly. So if you're a married couple filing jointly and you make $100,000 together, then you're going to be in the 22% tax bracket. So you can see the differences here, how they modify things for individuals and married couples. And here's the one for head of household. So these are the three different tax brackets. Now, once again, as I mentioned, not all of the income is going to be taxed at the same rate. Let's take a look at an example right here. You can see here, example one, taxable income is going to be $32,000. So this is for an individual, and the first $9,875 is taxed at 10%. So you're going to owe $987.50. And then after that, everything above that is going to get taxed at 12%. That's the next bracket up. Here's another example. If you make $50,000 a year, then once you pass that $40,125 mark, you go into the next tax bracket, and then you jump from 12% to 22%, everything over that tax bracket line. So that's pretty much how you get taxed. Now, if you're from states like Texas, Tennessee, Nevada, that's pretty much the end of the story. But if you're from a beautiful state like me of California, don't forget that you got to include your state income taxes as well. And if you're an individual that's making $100,000 a year, that's taxable. Take a look at this. It shows that you're going to also pay on top of that an additional 9.3% as well. That's going to be an additional $2,581.60 plus 9.3% of the amount over $58,634. So take into consideration your state income taxes as well. All right, so I think that's enough about talking about how they're going to take our money. Now let's discuss some ways that we can go and take that money back. So there's going to be two main ways that we're going to be doing this. Take a look at this. It says the two most common ways of reducing your tax bill are going to be through credits and deductions. So the first one, credits. That's going to be once you know how much money you owe. Let's say you owe $1,000. If you get a credit, it's going to reduce that $1,000 in whatever amount of credit you got. So if you got a $1,000 credit, it will totally wipe it out. Now, a deduction, on the other hand, that's going to reduce the amount of taxable income that is subject to that tax. So this could potentially knock down your tax bracket as well. So this is very, very good. So these are the two main ways. credits and deductions. Now, let's say you're somebody that's like, I don't have any deductions. I don't know what I can claim. Well, guess what? They have 2020 standard deductions for you. Here they are right here. If you're single or you're married filing separately, you get $12,400 in standard deductions just sent to you. Here you go. And if you're married filing jointly, you get $24,800, and head of household gets $18,650. Now, if you can claim deductions and you can claim more than these, you get the greater of the two. All right, so let's go ahead and get to the good stuff. And let's start off with stimulus checks and unemployment, since these two were very applicable for 2020. So stimulus checks. You do not have to pay taxes on stimulus checks. Now, if you didn't receive them and you were eligible to get them, keep in mind the fact that you can get these as a rebate on your 2020 taxes. And remember, the first round was $1,200 for individuals and $500 for their dependents. And the second round was $600 for individuals and $600 for dependents. So let's say you were eligible and you didn't get it because you were one of the millions of people that the IRS had errors and trouble getting you your checks. Well, you can get $1,200 plus $600 for a total of $1,800 for a tax rebate for the stimulus checks. And unemployment. Now, unemployment, on the other hand, you do have to pay taxes on. So if you didn't have taxes taken out every time you were receiving that benefit, you're going to have to pay for that at the end of the year. So some people pay it when they're receiving it, some people pay it at the end. But stimulus checks, you don't have to pay taxes on, and unemployment, you do. Now, for those of you with little ones, you're going to want to listen up, because also in 2020, we had the child tax credit. Take a look at this. It says, here are some of the numbers to know before claiming the child tax credit or credits for other dependents. And it says $2,000, the maximum amount of child tax credit per qualifying child. $1,400, listen to this, the amount of the child tax credit per qualifying child that can be refunded, even if the taxpayer owes no money. So you can get a refund per child for $1,400. And if you have adult dependents, you can also get $500 as well. And that's any dependent that's over the age of 16, so 17 and up. And in order to qualify for this, it says the amount of adjusted gross income for the taxpayer, if you're a married couple, must be $400,000 or less, or for an individual, $200,000 or less. So if you have children, this is a great tax credit that you can take advantage of as well. And you guys, if you don't have a business, you need to start one. I mean, the 199A, take a look at this. It says the qualified business income deduction, or the QBI, is a tax deduction that allows eligible self-employed or small business owners to deduct up to 20% of their qualified business income on their taxes. You guys, you need to start a business because it helps you immensely on your taxes. Now, you might be saying, but Steve, I don't know how to employ people, get a business license, or do any of that stuff. Well, listen, take a look at who's eligible for this. It says sole proprietorships, partnerships, S-corps, or LLCs. So sole proprietorship, that means you don't need a business license, you don't need a corporation, or any of that stuff. All you have to do is be in business by exchanging goods or services for money. You could have a side gig and you are considered a business owner, and you could take advantage of this as well. So if you've been sitting on the sideline thinking about maybe jumping in, starting a business or a side gig, you should do it, because there's a ton of benefits. Not only will you get some extra income, but you'll get some extra tax help as well. Now let's discuss capital gains. Now, I know there's been a lot of people this year that downloaded the Robinhood app and the Webull app, which if you haven't downloaded a brokerage yet, a link in the description below to download the Webull app. When you do so, you can get 2 free stocks, one of which could be valued up to $1,400 if you get lucky. But you can go ahead and do that, and if you do and you get stocks and you sell them right away, you get taxed on it as regular income. But if you hold them long term, they go into long-term capital gains, and here's the brackets for those for 2020. 2020 capital gains tax rate income thresholds, and this might apply to a lot of people that did some stock trading last year. And you can see if you got up to $40,000 in taxable income, it's not taxed, it's at 0%. But there's the other brackets as well, where you get charged 15% or 20% on those capital gains. So take that into consideration as well. Now, also take into consideration that if you're a student continuing your education, you should take advantage of the AOTC. Now, take a look at this. It says it is a tax credit of up to $2,500 of the cost of tuition, certain required fees, and course materials needed to attend and pay during the tax year. Also, 40% of the credit for which you qualify, that is more than the taxes you owe, up to $1,000, you can get refunded as well. So If you're a student, take advantage of the AOTC. And don't forget your retirement contributions for your 401k, your 403b, and your 457, which is going to be $19,500. And also the catch-up contributions for those over the age of 50, you can add on an additional $6,500 as well. And now there's a lot of people that have HSAs or health savings accounts. And these are really awesome because you're able to invest money that's going to go towards your medical expenses that are going to help you out on your taxes as well. And as you can see here, in 2020, the limit was $3,550 for individuals and $7,100 for couples. So that's the HSA or health savings account you're going to want to take into consideration as well. And lastly, one of the ones that I wanted to mention was the EITC. Now this is going to be the Earned Income Tax Credit Relief. And I think this is going to be very applicable to a lot of people in 2020 because this is for people that have really fallen on hard times. This is low to moderate income workers that with qualifying children that may be eligible to get this. And this is for people here you can see that have a lot of expenses right now. They're having a difficult time, or they're also widows or widowers. So definitely look into the EITC as well for your 2020 taxes. Well, there you guys have it. And this is by no means a comprehensive list. These are just some of the things I thought of that I thought we should probably take into consideration when doing our 2020 taxes. And once again, when in doubt or if you have any questions, be sure to consult a professional tax attorney or CPA. Remember that Steve is just a guy that talks to his phone in the corner of his room and likes to upload it to YouTube. And once again, you guys, if you like and appreciate these updates and you haven't already, why don't you just go ahead and take a second to smash the like button. I would appreciate it. It helps out the channel. And if you're not already part of the viewing community and you would like to stay up to date on everything rolling out, take a second to smash the subscribe button and turn on that notification bell so that way as soon as I upload videos, you can get notified right away. And if you don't already, be sure to follow me on Instagram as well at SteveRam3. Well, you guys, I hope this reaches you well. Take care. Don't forget to file your taxes. God bless. This is Steve.